Good morning and good afternoon to everyone around the world. Welcome to this webinar on the Southern Cone's evolving landscape and what to expect for 2021. My name is Marco Parasso, and I'm a client relationship manager at FrontierView, supporting clients in the consumer good, B2B, technology, and healthcare industry. We're coming to you today from Washington, DC and New York City. Before we jump in, I realize that some of you may potentially be new to FrontierView, so I thought I would take 2 minutes to provide you with a very quick overview of our firm and how we work with our executives at major multinationals. FrontierView provides the world's best market intelligence and advisory services for global business professionals and leading multinationals. We help our clients grow and win in the most important markets by informing and powering the market monitoring, planning, execution, and other critical decision processes of our clients. With continuous research and insights, custom solutions, and transaction support services, we provide our clients with timely and actionable insights to adapt and win in changing markets. The company is headquartered in Washington, DC, with offices in New York, London, and Singapore. For more information, please visit www.duckerfrontier.com. So with that very brief overview, it is now my pleasure to introduce our presenter, Alex Schober. Alex is our senior analyst and practice lead for Latin America research and covers Argentina, Chile, Peru, and Uruguay for FrontierView.
Thank you, Marco, for having me.
Thank you, Alex. With that, I think we can go ahead and get started. We're already 3 minutes in. So just to briefly touch up on the structure, our teleconference, it's going to be a 45-minute moderated discussion followed by Q&A. You are more than welcome to submit questions or points of clarification by clicking on the Q&A box on the GoToMeeting application. Simply type them to Ducker Frontier Webinars, and we will do our best to answer them as quickly as possible. Lastly, as I mentioned, we will also record this session, and we will share both the recording and the slides after the webinar is over. So Alex, thank you so much for your time with us today. I'm really looking forward to this session. Obviously, there's a lot going on with these countries and there's plenty to cover. So let me pass the word over to you. Please take it away.
Thank you, Marco. So thank you everyone for joining us today. I think this is going to be a great session. And really the idea of the agenda that we have planned is we're going to start really broad with understanding the economic recovery from COVID-19, talking a little bit about how this sub-region fits into the regional context of Latin America. And then we'll get more specific. We'll start talking about some of the specific topics of interest for Argentina, Chile, and Peru, respectively. And then we'll finish things up with the key takeaways and actions to take section, and hopefully plan for a good 10 to 15 minutes of Q&A at the end of the presentation. If you do have a question that you'd like to ask, you can send the chat to Ducker Frontier Webinars. That will ensure that you get your questions potentially asked by the end of the presentation. And if there are more questions than expected, we could always reach out to you after the webinar to answer some of your specific questions. So that being said, I'm going to go ahead and get started with this first section of kind of the regional overview within the context of COVID-19. And one of the first takeaways that you'll see here is that Peru and Chile are clearly in sort of the dance phase of our hammer and dance analogy. They have started to flatten the curve at least a little bit. I will say, obviously, this is at very high levels, with Peru being one of the worst hit countries in the world in terms of deaths per millions of people, and Chile not totally far behind. On the other hand, we have Argentina, which is frankly probably in the worst moment of its pandemic. You can see the number of deaths that Argentina has seen over the last couple of weeks, especially, has begun to accelerate markedly. And it's interesting because unlike where we were at the beginning of the pandemic in Argentina, where Argentina basically locked down the whole country and most of the cases were centered in the Buenos Aires metropolitan area, we're at the point where reopenings throughout the country have really resulted in the virus spreading outside of the city of Buenos Aires and the immediate peripheries of the province of Buenos Aires. And it's clear that now that the virus is outside of the city of Buenos Aires and really throughout the whole country, it's harder and harder to contain. And like I said, it's clear that Argentina is at its worst moment. So this is going to be a pivotal few weeks for Argentina to deal with the outbreak. I will say that one thing that is concerning to me is that despite the fact that Argentina is in its worst moment of the outbreak, it is not testing nearly enough. And the analogy that I've used many times for testing, which probably some of you have heard up until this point, is that if you're not testing very many people, you're only seeing the tip of the iceberg, right? And if you are testing more and more people, which is something that you can see much more in the case of Peru and Chile within this sub-regional context, you're seeing the tip of the iceberg and several feet down. This is a major reason why Argentina has had such a high positivity rate in the tests. On some days, they've had positivity rates of upwards of 60 or 70% of the tests. And this is a huge problem because once we get to the point where we do pivot into any sort of secondary waves, it's going to be really important to know who has the virus, who has had the virus, and who might have the virus. If that is the case and you do have more information, you'll be able to do more targeted lockdowns than, say, wide sweeping national lockdowns that have been the case in Argentina and many other countries in Latin America, especially towards the beginning of the pandemic. If you have a specific idea of what is the current situation of the virus, you can be a lot more pinpointed with your social distancing measures, which would have a lot less of an economic impact. The other critical aspect of this hammer phase that we saw out of Peru and Chile at the beginning and are still kind of seeing in Argentina now was ramping up ICU capacity, which is something that you can see on the right side here, that Peru and Chile especially have significantly ramped up ICU capacity, which is going to help pay dividends in the future if Peru and Chile do need to go into more targeted lockdowns on any second waves in the future. Meanwhile, Argentina luckily already had a pretty decent ICU capacity and had one of the better hospital infrastructure networks in the region, but they haven't done nearly as much construction in that regard. The other thing that I think would be very telling as to what we should expect out of lockdowns going forward are the approval ratings of the leaders that we have in the region. And you can see that Fernandez, Piñera, and Vizcarra, respectively, have all seen their approval ratings go down at least a little bit from their peaks during the beginning of the pandemic. And I think that's just going to become more and more problematic going forward when there are episodes in which the pandemic starts to get out of control again. And on the other hand, you're balancing COVID-19 and lockdown fatigue. Our current view is that we're not going to have more national lockdowns in our base case scenario, just because it is a huge political cost, especially amid the context that all three of these countries have major elections in 2021 in one shape or the other. So how does this all affect the economic impact of the economies that we're covering today? You can see that really the main trend here is that the longer and the more stringent the social distancing measures, the worse the economic impact, at least for 2020. And to that end, with Peru and Argentina having two of the most strict lockdowns in the entire world, you can see that we're expecting double-digit declines out of these two countries before a rebound in 2021. On the other hand, Chile never had a national lockdown, and they've also had a few other things play in their factor, such as copper prices being high and copper production keeping up with that, which is something that we can't say about Peru. We've also seen more targeted stimulus measures, and we've also seen a bill that allowed Chileans to take 10% of their pension funds, which is one of the main reasons why we're seeing an actual upward revision to growth in the last few months. I will warn everyone listening to this call, however, that the 2021 rebound, which is something that I'll show you on this slide, is definitely more of a statistical effect than anything else. Remember that these are in percentage terms. So if you're comparing anything to the horrible Q2 that we saw in every country in Latin America, it's not very hard to have a pretty impressive looking number in percentage terms in 2021. And keep in mind, if we're looking at levels here, this is just quarterly levels, once we get into 2021, a lot of this quarter-on-quarter growth is nearly flat. And this is going to start playing an impact when we get into the 2022 and 2023 numbers, where you have more of the structural impacts of the COVID-19 pandemic start playing a bigger role, such as higher unemployment, more companies going out of business, a lot of these shops not coming back because the companies did go out of business. And because of that, lower wages, lower consumer confidence, and fiscally strapped governments all create a situation in which it's tough to get back to the same trend levels of growth that we were at before the pandemic. So all that being said, you can see that we do see a relatively nice jump in growth in 2021, but a lot of this is a statistical effect, and it's definitely very divergent by industry, which is something that you'll see on this page here, that we have seen some pretty much very divergent trends, with the overall message being that few industries have been spared from COVID-19 within the region. One thing I'll highlight on more of a positive note here is that you have seen mining out of Chile do quite well. In fact, you've actually seen year-on-year growth in H1 2020 in the mining sector in Chile. And a lot of this has to do with the copper prices, which I'm going to show you in a minute, and the fact that Chilean copper mines are online. You can also see that as far as other industries are concerned, this has been more or less a global trend, right? You've seen construction being hit really hard globally. You've seen the wholesale and retail trade being hit really hard. These bricks and mortar stores weren't open for a long time. And then obviously anything that's more people facing or leisure based in focus, such as hotels and restaurants, these have been hit very hard. And this is probably the last sector to recover out of at least the ones that we're presenting here. Now, if I'm thinking about something that could be seen as more of an opportunity out of the industries that I'm presenting on this slide here, I actually think despite the massive fall that we're seeing in construction right now, that construction will end up being one of the more winner industries in 2021, mostly because most of these governments have put in a significant amount of money into their 2021 budget, into public infrastructure, into public works projects, which is really all going to help construction have a pretty strong rebound from the depths that they're at currently. So that's just something to keep in mind going forward. As far as, once we're getting into this rebound phase, I did want to talk just briefly about the fiscal stimulus that we have seen in the sub-region up until this point. And two things I'll notice about point here that I think are key themes for understanding this slide in government spending in general amid the pandemic is that on one hand, the more strict and longer the lockdown, the more stimulus you need to stave off bankruptcies and unemployment. And you can see that Peru, has spent the most in terms of percentage of GDP in the region, but that hasn't stopped them from showing this negative 12.1% decline that we're expecting for 2020. So the longer and stricter the lockdowns are, the more money you need to avoid a stricter lockdown. On the other hand, you can see Argentina here, which has not spent nearly enough money, and this is mostly because of the pre-existing conditions Argentina had before the pandemic. In other words, countries that had lower fiscal flexibility before the pandemic have a lot less firepower now to mitigate the more negative economic impacts of the COVID-19 pandemic. And that's a huge reason why we're seeing, or we're expecting a more rocky economic recovery out of Argentina in 2021 and 2022 compared to Peru, which even though Peru, we are expecting to have a pretty strong fall in 2020, in 2021, we're expecting a very sharp rebound and greater trend growth in the longer term, and one of the first few countries to get back to 2019 levels of economic activity. So the stimulus matters. But I will say, regarding the first message that I just mentioned in the last page, with insufficiency out of stimulus and the stronger the lockdown, the more money you need to spend, you can see that this trend is clearly pointing true with Peru. And the employment data that we've seen in Peru, at the worst of the economic crisis in Peru, we saw about half of the jobs in the Lima metro area destroyed. This is obviously a very eye-opening statistic. Luckily, we've seen a lot of these jobs come back, mostly in the informal sector at this point. Meanwhile, on the other hand, you've seen Argentina really kind of muddle through with this law that is preventing layoffs in the moment. And I do think that this is kind of not painting at all an accurate picture of the labor market in Argentina, because, once this law is inevitably lifted, you're probably going to have a huge wave of layoffs. So that's one-off effect. The other one-off effect that I think is actually, it's not even much of a one-off effect, it's a longer effect of all this, is if you're a small, medium-sized enterprise at this time, and you're asking yourselves, what else can I cut to stay open? If you need to either choose between laying off 2 or 3 employees or shutting the door, you may be forced to shut the door because it's nearly impossible to fire people right now in Argentina. And I have read many reports in Argentina that there are quite a few small and medium-sized enterprises, upwards of between 10 and 15% in Argentina, and probably even more than that once we get further along into the year, that are seriously considering shutting their doors or have already shut their doors. And it bears bringing up that almost 70% of Argentina's formal employment is in small and medium-sized enterprises. Therefore, it's extremely important to keep that in mind and realize that this is probably an artificial statistic that we're seeing out of Argentina. But I will say, lastly, on a more positive note, I had mentioned copper a few times up until now. I do think this is the saving grace for Chile and Peru going forward, even though only Chile has really been able to take advantage of this over the last couple of months because Chile's mines stayed online, where Peru's mines didn't for the entire pandemic and only just now starting to get back to close to pre-pandemic levels of production. But that doesn't change the fact, okay, copper prices are up 9% year to date. That's a huge boost. That's way higher than oil and a lot of other commodities up until this point. Briefly to explain why this has been the case. One, China's economy reopened earlier and faster than basically every other economy in the world. And China is the world's biggest copper supplier and consumer. Therefore, their stimulus has put in a lot of emphasis into the needs of copper and has pushed up copper demand. Two, there have been supply side disruptions, especially out of Peru when the mines were closed. You saw Cobre de Panama closed in Panama. You saw a couple of important copper mines closed in Africa as well. So all of that has pushed up prices. And then the third factor that's kind of important here, and maybe a little bit less important, is that since commodities are priced in US dollars, the US dollar has been weakening over the last couple of weeks. And if you have a weaker US dollar, it naturally makes the price of copper per pound look a little bit better. So that's just something to keep in mind. I don't think that's something that's extremely important to the outlook of copper. And overall going forward, you'll notice this when we present our scenarios, we do expect copper prices to remain more or less at similar levels that they are now during 2020, even though an upside scenario would have them be higher than now. So with that being said, what we're going to do now is open the floor to the first polling question that we have for the evening, or for the morning, excuse me.
And so, Alex, as we see the results on this poll, I do have a quick question for you on the fiscal stimulus slide that you presented earlier. You mentioned how Peru would be in a much worse situation without the heavy stimulus package. But when you look at the statistics and everything pointing towards it, Peru is one of the worst hit countries already. And I was wondering if you had any specific reason behind this, if you had any more information to share on this topic in particular.
Yeah, that's a really good question. I mean, I think that Peru, unlike a lot of other countries in the region and particularly in the world, when they put on their lockdown in mid-March and going into April and going into May, it was a lot more of a sudden stop than most other countries that did decide to go into a national lockdown, at least if we're thinking about, say, comparing this to Chile. And you had a good 50 to 75% of the economy completely offline. I think another thing to bear in mind is that Peru has a little bit less internet infrastructure than some other countries in Latin America, and it's less and less likely that people are able to do their jobs remotely in Peru. You have about 65, 66% of the population that's in formal sector. So if you take that into consideration, if you do say everyone needs to stay at home, a lot of people are immediately out of work and you have economic activity fall substantially. So I think without the stimulus, you could be looking at a way worse situation for Peru's economy.
Fantastic. Well, thank you for providing that. And these are some very interesting results from the poll. Do you have any comments on them so far?
No, not yet. I think we can go ahead and continue the presentation just to save on time.
Perfect. Well, thank you for your answer on the question, and thank you everyone for voting in the poll. I think we can move on now to our country deep dives. The first one that we'll start with is Argentina. Alex, you and I know Argentina well. We've been lucky to both live and work in the country and experience the volatility that it has to offer. I personally remember in 2018 when I first arrived, it was $1 to 18 pesos, and then when I left, it was 1 to 45. To be honest, it seems to continue to spiral out of control, and I wonder if you could shed some light on the current situation in particular.
Great. No, and I definitely, have been in Argentina 2 different times during 2 very different episodes of the FX situation. And this is going to be the main issue that we're going to be talking about with Argentina today. It's going to be something that I think is very top of mind for not only multinational companies, but also everyday Argentines, investors, what have you, because we are in a very, in my opinion, dangerous territory with the parallel exchange rate being more than double the official rate. And the last time that the gap was this wide was during the hyperinflation spell of 1989. Now, I don't expect Argentina to repeat that episode, but it's clear that the government needs to tread very carefully to avoid another currency crisis. Frankly, up until now, the central bank and the government have sent all the wrong signals. You can see the government had a great opportunity to take advantage of the goodwill generated by the debt restructuring and use that momentum to create a longer-term economic plan, to send more signals to markets that they're trying to get the house in order. But instead, they only tighten capital controls, which is something you can see on the right, the specifics of the capital controls from September. And, you can see that the parallel exchange rate is depreciated significantly even from that moment. So this is really a problem of unanchored expectations for Argentina, a lack of policy credibility. And even though Argentina has walked back on a few of these very specific capital control measures, namely the financial markets parking rule, and the ability for businesses to have slightly more favorable access to U.S. dollars, it's still a pretty tough operating environment, to say the very least. But why has the government resorted to this? And why has the situation only gotten worse since September? The first reason is purely fundamental and has more to do with monetary policy and FX reserves than anything else. And you can see that the reserve situation is really the key cause of this spiraling depreciation of the parallel exchange rate. You've seen that the reserves have declined to a multi-year low. And if we were to update this chart today, it's actually below $40 billion as of today, which is something that's extremely concerning, because at the beginning of the year, you had a lot of opportunities to up the reserves, because that's usually the time where you bring in a lot of agricultural export money. And that's usually the time where you have a bump to reserves. That was not the case this year. That was already a moment where I was a little bit concerned about how the rest of the year would look, because you basically had no increase in reserves at all. Now, this is showing gross reserves, and we're talking about net reserves or liquid reserves. Most local economists estimate that this number is close to 0 or even negative. This is something that the central bank does not publish, at least publicly. And this is basically the reserves that the central bank has for discretionary purposes to defend the peso. So in other words, the central bank is running out of money to defend the currency, the official rate. And that's the main reason why you've seen the market rate, which is effectively the parallel exchange rate, spiral out of control. These market actors are unconvinced that the central bank is going to be able to keep up this tight grip on the currency. The other thing that's been a major problem has been the monetary policy expansion. You've seen here that this is basically showing M2, which is a measure of money supply. And you've seen it go up substantially in several months during the pandemic, upwards of close to 100% in a few months. And really what the government has been doing has been spending money to finance the pandemic situation in the country and have some sort of economic stimulus. But because Argentina had its debt issues, they can really only finance this deficit by printing money, which is something you've seen on the right side. It's something that is going to cause a significant problem once the economy starts to open up further, because the only thing that's keeping inflation down at this point is the fact that the demand is really low. So this massive influx of money supply into the market is going to have impacts on both inflation and eventual depreciation of the currency. And it's something I think we need to very much keep in mind and monitor over the next couple of months. The other issue, though, and something that I honestly think is probably a bigger issue and something the government certainly has more control over, is a lack of policy credibility. This is something that I alluded to 2 slides ago, where the government is in a situation in which they do have total control of over the future of the economy. They had a lot of goodwill generated by the sovereign debt negotiations. And now we're kind of at the point where the fact that there's no economic plan, there's no real exit guidelines from the current capital controls, all this is a significant issue. The good thing is, ironically, the IMF could end up being the saving grace for Argentina. I know that Argentina and the IMF have a bit of a rocky relationship, but you can see here that Argentina doesn't really have a choice but to restructure this debt, especially once we get into relatively daunting payments in 2022 and 2023. So it's really important for the government to really start signaling things in the right direction. The government should and could change course and policy directions now and start to hit some of these positive signposts even before the IMF negotiation, such as creating exit guidelines, creating a credible medium to long-term macroeconomic plan, and even being open to the possibility of new net financing from the IMF. And this may be something that's probably from the Kirchneristas in the governing coalition. But, if we talk about how the government has been financing all their spending through printing money, this could end up being something that helps smoothen the fiscal consolidation path and create less inflationary pressures in the medium to long term. On the other hand, if you start seeing more of these negative signposts prevail, I do think you're going to start seeing a negative scenario play out from a macroeconomic perspective. You're going to see inflation start to go up way higher than the current rates and stay above 60% during 2021. And you could have a pretty disorderly currency crisis, which is something I'm going to show you here. And I think one of the aha moments of this presentation is me sharing this slide, which basically explicitly calls for the downside scenario, assuming a 65% depreciation or devaluation of the currency in the first quarter of 2021. You may ask me, well, could it be worse? My answer is, yeah, it could be worse, but I'm thinking at least realistically here, because the 65% is basically the difference between the official rate and the taxed currency, or the dollar solidario, if you want to call it that. And if the government tries to at least correct that difference, either through letting the peso run or through purposely, setting a new value of the currency to be 65% lower through devaluation, then I think that is a pretty realistic bound to expect, because unlike 2018, when the currency was vastly overvalued in terms of real effective exchange rate compared to its trading partners, we're actually at a point where the official rate is still technically competitive. Now, fundamentals would suggest that it should be a lot weaker than it is now. And that's the reason why we do expect a pretty decent sized depreciation, even in our base case scenario in 2021 and 2022, to start catching up to inflation and even surpassing inflation in many cases. I do think it is worth bearing in mind that we're not going to see some sort of catastrophic fall of the peso to 200 next year, just because it would kind of go outside of the levels of fundamentals and would play in a lot into markets overreacting, at least in the dollar blue, to the reality of the situation. Now, as far as our scenarios are concerned with Argentina, I've really only talked about the exchange rate. There are a few other things here that I think are really important to touch on. All of our scenarios are including some of these key assumptions from the external side, with Europe, China, and the United States being able to avoid new lockdowns, and you have some sort of outbreak managed through ad hoc social distancing measures and varying degrees of testing and tracing through the end of 2021. You have ongoing outbreaks managed and mass vaccination or herd immunity through the end of 2022. And I will say, to back up on the vaccine for a moment, we are expecting there to be more moderate access to the vaccine in Latin America probably by the end of next year. But if you're going to get to mass vaccination, getting to over 50% of the population, that's going to be a lot slower of a process and will probably take another year. As far as exports, we do expect exports to China to be relatively resilient, but I think other key partners are important to monitor, namely Brazil in the case of Argentina. And as far as, some of the key drivers from the base case, I do think that we're going to see a significantly faster depreciation of the exchange rate even in the base case, and you'll start seeing the really stringent effects of the super cepo starting to become eased towards the end of 2021 after the legislative elections towards the end of the year. I do think you're going to see an acceleration of inflation, with inflation being between 45 and 59% in 2021. And I think the key thing here is the IMF negotiations. We do expect a deal to be reached in Q1 with little to no new net financing in the base case. I think this is kind of the main pivot point between the upside and the downside as well, is if you do have a new deal earlier in Q1 and you have fresh financing and a really robust economic plan to accompany the IMF, I think that's a very positive signal and could create a more upside scenario for Argentina in the medium to long term. Whereas if you have a lot of infighting about the IMF deal and you don't have any deal until the second quarter, you don't really have a lot of new deals for the economic plan, no new net financing, that's a pretty negative situation. And then what else could go wrong before that, as I mentioned in the last slide, if you continue the current set of policies and you don't change course at all, and you just simply run out of the reserves, the government keeps saying they don't want to devalue, but they may not have a choice. And in our downside scenario, we do kind of assume that they don't have that choice and that the peso depreciates substantially between now and Q1 of 2021. Again, you can see all of our GDP forecasts for all the scenarios at the bottom here. You can see that we're expecting growth to become more mild in 2022 and 2023 after the initial statistical rebound in 2021. But going forward, that's the main picture that we're looking at. So with that being said, I'm going to open the floor for another poll regarding Argentina specifically.
Thank you, Alex. I think this poll question is going to be fascinating, and it'll be really interesting to see the results. I guess as we wait for the answers, I wanted to ask if you see any pockets of opportunity in Argentina, whether that's for B2B companies or consumer good companies, or even those that sell into the government.
That's a great question. I just talked a lot about a relatively pessimistic picture of Argentina, but let's not forget that there are opportunities in the country. The first one that I think is important is something that I mentioned at the beginning of the presentation: export-oriented industries. Even though you have the retenciones, which are basically export taxes, still pretty high in a lot of exporting industries, it bears repeating that the peso is still technically competitive if we're comparing it to Argentina's main trading partners, especially the dollar, which makes export-oriented industries and the consumer bases that live in export-oriented provinces potentially winning segments going forward. I think there are specific industries that can end up benefiting. Mining is one that comes to mind, as they've seen a lot of investment over the last couple of years, and the government lowered the export royalties for the mining industry just a few weeks ago, actually. And then finally, the other thing that I think is important is any sort of more resilient consumer class. So the upper class, if you're a consumer goods company, that have access to dollars and can convert easily into pesos and buy things locally. I think that's something to keep in mind. And also another very specific consideration is the fact that a lot of Argentines are probably not traveling abroad during the holiday season. You could see a pretty good holiday season out of Argentina, especially from the consumer goods standpoint, just because a lot of the neighboring countries, Uruguay notably, is not allowing in Argentines during the summer season. So you could see a lot of Argentines staying home and spending at home.
Thank you for that answer. As we look at the results, I find it quite interesting, at least, that the majority of people responding think 2022, but a surprisingly amount, almost 40%, more than 40%, excuse me, already this year in 2021. Which is quite surprising in my opinion.
Yeah, it's surprising, I guess, if you think of it in absolute terms. But we've asked this question in our LATAM webinars and in other webinars that we've had over the last couple of weeks, and we have seen a significant more amount of outperformance than I think we expected going into the pandemic. I think a lot of this is more industry specific, with pharma companies and specific industries and IT companies and big tech and whatever. Those companies have been able to tap into the pandemic and the COVID-19 economy a little bit better than, say, fast-moving consumer companies, companies that may be directly impacted by the fact that manufacturing was totally offline for a while. So there has been I guess more outperformance than expected, even in Argentina, which is good to see.
Fantastic. So thank you for providing that overview on Argentina. Honestly, I think we just scratched the surface, but in the interest of time, I think we can move on to Chile. So I was wondering if you could walk us through how you're seeing the Chilean economy and the political situation, especially with everything that's happened over the past week or so.
Yeah, no, good point, Marco. And our main focus of Chile is going to be the social and political risks that we expect over the next 2 years, namely within the context of the constitutional vote happening just last weekend. This is a slide that I've used pretty frequently to discuss, what was happening during the protests in 2019. What are some of the main demands that Chileans have? And you can see really kind of the answer is pretty simple, even though it's easier said than done, is that Chile would like to be a wealthier and more income equal country, be more towards the upper left-hand corner of this slide, and the OECD groups of Western Europe, Canada, the United States, and what have you. And even within the Latin American context, it's well known that Chile is a relatively unequal country, at least by income. Now, with the chart on the right, these were some of the more important demands from the protests that started in October of last year. And a lot of these things haven't been addressed. And I would even argue that have even been exacerbated by the pandemic, such as the poor quality of public health care and education, income inequality and inequality of access, the low pensions, which is something that still hasn't been addressed by reform. All these things are going to become incredibly important. But one thing that was definitely top of mind for Chileans was the Constitution. The Constitution from 1980 was, drafted under the former dictatorship of Augusto Pinochet, and that was a symbolic enough thing for Chileans to want to rewrite this document and create a completely new democratically built document. But I will say that this process is extremely long and laden with political uncertainty, and you can see that not all of these events are specific to just the Constitution. So you have the plebiscites that happened last weekend in which Chileans voted in favor for a new constitution and in favor of a new completely elected body to write the Constitution. You have elections for this constitutional body in April of 2021, coincidingly with local elections. I do think I'm going to talk about this on the next slide, but I do think this is going to be a bit of a foreshadow for the presidential elections, which take place at the end of next year. And all of this is in the context of the assembly meeting and drafting the Constitution for 9 months and extendable by 3 months. Frankly, they're probably going to take advantage of this 3 months extension, and you're going to have this process go from May 2021 until May of 2022. And then 60 days later is when you'll have the Constitution going to a popular referendum in which Chileans will need to vote in favor or against the measure. And if they vote against the measure, really, you kind of have to do all this process again. So all this to be said is that this is a pretty stressful process for the country from a political risk standpoint. And it's something that we're very much going to keep in mind as we cover Chile over the next 2 years. Now, talking a little bit more about what happened last weekend, as you know, the first step took place on October 25th. We had the highest voting turnout since 2012, which I think is important to mention, even more than the previous presidential elections. Excuse me. And you had Chileans decide overwhelmingly on a new constitution. I think that this voting gap is extremely important because a lot of the local polls suggested that the yes vote would win between 60 and 70%. Some of them were a little bit higher than that. But overall, almost 80% voting in favor of a new constitution clearly shows that there is a popular mandate to get this done. I do think that there's something positive to be said about this. The first is that because you have this popular mandate, I do think you're going to have a relative period of social peace until going up until April 2021, mostly because this was something that many people really wanted to have happen. The other thing that's important is that, since the assembly needs to approve the draft by 2/3 majority, this will dilute some of the more radical proposals from either side of the aisle and reduce the probability of more institutional change from the constitutional body. In other words, the Constitutional Assembly needs to reflect the citizenry and needs to vote like how the majority of Chileans would actually want to vote. I think that's something important to bear in mind for firms because a lot of the local media and international media is focusing very much on the economic model being completely changed and the institutional model being completely uplifted, I think there are certain things that the Constitution are probably going to include, such as universal health care and universal education. But I doubt the new Constitution would get rid of, say, central bank independence. And it seems unlikely that we're going to see a complete change in the political system. So all of this is to be said is that even though there's going to be a lot of noise between now and 2020, I think this popular mandate clearly shows that this is something that Chileans wanted to have happen. And you could have a situation in which a lot of the social anxiety and social unrest that we've seen over the last few months start to die down, at least by a little bit. Another key takeaway here is I mentioned on the last slide that the election for the representatives for this assembly could end up foreshadowing the presidential elections that take place in November and in December. And I think something really interesting here is that the independent list on this poll has a relatively high voting intention. And I honestly think this adds evidence to our longstanding view that Chile has a pretty high likelihood of having a very polarized presidential election next year, likely between anti-establishment or outsider candidates. This doesn't necessarily mean that we're expecting a more radical candidate to win in our base case, but it's something to bear in mind because if we're looking at the presidential voting intentions, you can see that there's no one even close to the 10% range of voter intentions now. Obviously, it's too early to tell. We don't have elections for over another year. But I do think it's important to bear in mind that there are no clear front runners, and a lot of the people that could end up becoming have a bigger role in the Constitutional Assembly or creating more of a vast coalition going into the Constitutional Assembly could end up having ramifications for the general election as well. A few candidates here that I think are worth discussing really quick are Joaquin Laden, who is the mayor of Las Condes, is technically part of Chile Vamos, which is the governing coalition of Sebastián Piñera. However, he is a little bit more moderate and has, I would say, more centrist populist leanings than a lot of other members of Chile Vamos, and could end up being a pretty competitive candidate in the elections next year. You have Daniel Jadue, who is technically part of the Communist Party. Is a mayor of a working class commune in Santiago. He could end up being a really competitive candidate as well, and does have sort of that outsider viewpoint. And then lastly, Jose Antonio Cast, who is basically Chile's Bolsonaro. I don't think he'll be all that competitive in the elections next year, just because his disapproval rating is close to the 2/3 standpoint, and also because a lot of this progression of wanting more social equality and whatever stands directly against a lot of what Jose Antonio Cast believes. So I do think that he would not be very competitive even in a runoff in the presidential elections for Chile. So quick change of topic with regards to politics. Look, we've talked a lot about the Constitution. It's a long process. It's going to be noisy. There's going to be a lot of headline risk. But really, the most important thing here for Chile to start solving the social debate is to pass reforms. Because the Constitution can include universal health care, universal education, all at once, but it needs laws to back it up. It needs funding mandates to back it up. And the reforms are something that could actually create a more structural change to the economy and the social economic fabric of the country. Namely, I think it's going to be very important to be monitoring the pension reform debate over the next couple of months. There are a couple of different proposals on the table. And within the context of Chileans being able to pull 10% out of their pension funds a few weeks ago, the pension reform becomes more and more crucial to tackle over the next couple of months. And then I also think, actual reforms to the education and healthcare sector are going to be important. But with the scrapping of the FONASA bill the other day, I do think that you're not going to see any sort of integral education or healthcare reform until 2022, after the Piñera administration has finished up. So all this to be said is that, this is our scenarios for Chile. I've talked, I guess, a little bit more positively or constructively about the Constitution than maybe expected up until this point. But what I will mention is we're still more pessimistic than consensus in the medium to long term, both with regards to GDP and with regards to the Chilean peso, just because I think the peso is going to be extremely volatile around all of those political milestone events during 2021 and going into 2022. And I also think it's likely that we're going to have a very contentious presidential election in which an anti-establishment candidate stands a pretty good chance of winning. And we may not know a lot about him or her until a few months into their mandate in 2022. So that's just something to keep in mind. And our base case scenario for the Constitution is that we have some changes at the margin amid a pretty contentious debates in that situation. But overall, it's not to be huge change of the status quo with regards to the economic model or what have you. So what could move the needle to the upside or the downside here? Well, I think Chile, more so than Argentina, could be significantly positively affected by the external environment. And, we've seen copper prices rise significantly. I talked about that earlier. But if we see copper prices continue this bull run into 2021 and 2022, the Chilean economy could substantially benefit, especially over the medium to long term, with export revenue starting to pick up, and vice versa if copper prices crash due to a lack of vaccine progress, large secondary outbreaks globally, what have you. As far as the downside scenario from a domestic standpoint, if you have violence linger and protests linger and they're not just concentrated around key constitutional votes, that would be a problem to the operating environments and places staying open. Whereas the constitutional debate, if you start seeing a state-heavy rhetoric prevail in contentious debates until the final referendum, that's going to create a lot of noise and lower investment confidence into the country. And then you have a more extremist presidential candidate win. So all that's to being said about Chile, I think that this is a good point to stop and ask the similar polling question for Chile that we just asked for Argentina.
Fantastic. And while we wait for the results, I just want to remind our listeners that you can ask questions using the Q&A chat box on the right-hand side. Just put Ducker Frontier Webinars and please send us any questions that you may have. And if we do not get to them today, we will send you the response by tomorrow.
Yeah, good point, Marco. And on that topic, I'm realizing that we only have about 15 minutes left. So I'm going to go ahead and stop the current poll. And let's start talking about Peru for the next 5 minutes to give us approximately, a little less than 10 minutes for Q&A. I know that there's probably quite a few questions on the line.
Absolutely.
So with regards to Peru, our main focus is also going to be on the politics. And something that you probably know is that Peru had an extremely strict lockdown. I mentioned this, when Marco asked me the question at the end of the first section of the presentation, to the point where you really only had about 44% of the economy online during the lockdown. Once the economic impacts of the lockdown became more top of mind for Peruvians, you had a lot more outcry for the economy to start to open back up. Unemployment and personal economic sentiment ended up becoming more of a worry for Peruvians than the pandemic itself. So you have seen the Peruvian government really accelerate the reopening process to the point where you have basically everything open again, save a couple other common things such as concerts and big indoor events and what have you. But there is international travel back. There's domestic travel back. Machu Picchu is opening this weekend. So there is a more normalization of the Peruvian economy now, despite how bad it was hit by COVID-19 and despite how strict the lockdown was. Now, that being said, politics has now turned into a major internal risk for Peru. You saw President Vizcarra survive an impeachment attempt in September. This was basically due to some irregularities regarding his knowledge of illicit contracts to a singer for entertainment during the beginning of the pandemic. And what you really had was a pretty contentious debate that turned into not a lot of people actually voting in favor of the impeachment. And a lot of the arguments used by the opposition were, well, we don't want we don't want a political crisis on top of an economic crisis and on top of a health crisis. But that being said, the political noise has kind of turned to a deafening volume. You have another investigation against Vizcarra currently, despite surviving the last impeachment. This one seems like it has a little bit more legs than the last one. You have the people in Congress who have denounced Vizcarra in the past, namely Alarcón, who are currently under investigation as well. And you also have a pretty market-unfriendly bill in Congress right now, where the Congress is considering allowing pensioners to take out close to 100% of their funds. This is obviously a mid and pension reform discussion of their own, but something that's worth bearing in mind. I think it's interesting because, Biscata has kept its popularity despite all this, despite all these investigations. But a real issue with Biscata and his political capital throughout his tenure has been the fact that he has no representation in Congress because Biscata technically doesn't belong to a political party. I think that's something that's incredibly important to bear in mind, but I will say that this will start to have impacts on the election. COVID-19 and the political noise that we're seeing from Biscata. I used to say that I think whoever Biscata endorsed in the presidential elections in 2021, and these take place in April, by the way, in 2021, that person would have a good chance of winning. I no longer believe that's really the case, and I do think that we're looking at a situation in which George Forsyth actually has quite a bit of momentum going into these elections. Granted, you have close to a third of the population still would appeal to them, but Forsyth is running into a situation in which I think he would be competitive in a runoff just because he is relatively centrist and could attract the votes from both the left and the right, depending who he's running against. So lastly, with regards to the scenarios for Peru, I do want to highlight the GDP graph on the bottom here. We are seeing a huge statistical rebound in 2021, but in 2022, we're going to start seeing a lot lower growth just because the 2021 situation was very statistical, and we're going to start having political risk of whatever the new government looks like in 2022. So that's just something to keep in mind. Our base case is that we do have a more pro-market candidate winning these elections, and a tense relationship between Congress and Biscata until Biscata's tenure is over next year. And then something I have not mentioned at all up until this point is you could see some mild regionally focused protests emerge after the pandemic has kind of completely come to an end. I don't think this is as high as a risk as other countries in the region. It definitely wasn't as high as a risk as it was for Chile. But the downside scenario here, which we do have a little bit of bias towards, is if you have Biscata impeached over the next couple of weeks, that would be a huge issue and create a very uncertain scenario for Peru in the medium to long term. And if you have a Colombian-style protest emerge after the pandemic ending. So with all that being said, I'm going to open the last polling question really quick. Let's keep it open for maybe 45 seconds. And while this poll is going on, Marco, if you want to start asking me some of the questions that we have from the audience for Q&A, I would be welcome. I would be willing to answer.
Absolutely. So in the interest of time, we can jump right in. The first question that we have is on our expectations for the future of capital controls in Argentina and what your thoughts are on that.
So the capital controls in their current form seem like they're probably going to stay at least until there's an IMF deal. The IMF may require Argentina to relax some of these capital control measures. I think the one thing that could probably be substantially drawn back is the debt provision that the central bank has put into place for U.S. or that external debt based in U.S. dollars needs to be refinanced because you can't take out you can't exchange all the U.S. dollars necessary to pay the debt. It's a pretty restrictive measure. I think that's something the IMF may require Argentina to get rid of. But as far as, the other capital controls, say like the 65% tax on purchasing dollars, or just the 200% limit or the $200 limit per month of exchanging dollars, I think that's probably to be in place until at least after the legislative elections at the end of next year.
Great, thank you for that answer. The next question that we have, and we have 5 minutes left, so please, anyone still on the line, feel free to message us with your question, and we hope we can address it, is on the Chile pension withdrawal bill. So they recently passed it, in which citizens are able to withdraw as much as 10% of their pensions. It seems like a good short-term fix, but they're curious to know the effects of this in the next couple of years, and how do you see this legislation and why?
That's a great question. I think the short-term impact is certainly positive, especially for consumer goods companies, because you had over a $10 billion injection into the economy immediately, just based on how many people took out money from their pension accounts. That being said, a lot of this money is being used to pay down debt, pay for utilities, pay for basic goods and services, and not necessarily for discretionary purchases. Now, in the medium to long term, I think this is to create a big risk, because now you're in a situation in which Chileans are or have already been complaining about low pension payouts, and rightfully so, versus having less money in the pension accounts in general. Now, I think that this makes it so that the pension reform that we're going to see out of Chile in the next couple of months is going to need to be a lot more integral and a lot deeper than if this pension withdrawal bill didn't happen. And this does create like a lot of medium to long-term risks, where a lot of these Chileans who took out 10% ask themselves in 10 years, why do I not have as much money saved up? That's kind of a situation in which the government might be on the hook to supplement the solidarity pillar of pensions a little bit more than they had planned to.
No, thank you. That's a really good answer to a good question. Another question that we received is when you estimate the staff layoff law in Argentina, and when it will be lifted.
This is a question that I honestly don't have a great answer to, because it's very speculative, but it's a great question because it's incredibly important. Now, it's technically in place until the end of November, as I said during the presentation, but I think it would be very likely to see this extended to the end of the year and potentially into the first quarter of next year, until there is that IMF deal to kind of stabilize the policy expectations from the country. But I also had a client tell me recently that they would fully expect this bill to stay in place potentially even up until the midterm elections next year, just because of how much political capital Alberto Fernandez is losing right now amid the pandemic and amid this economic crisis, that they're going to want to try to stop a massive amount of layoffs kind of for as long as they possibly can to try to keep some of the votes at the ballot box. That may not be sustainable, though, and you could reach a situation in which, okay, if you do have a huge currency depreciation and the IMF, say, requires that this layoff bill at least be relaxed, then you will start to see a little bit of a spiraling of the labor market situation. So all that to be said, in short, at least 2 more months, at max another year. I hope that answers the question relatively well.
Yeah, I think so. Thank you so much, Alex, for your time and your insights. We have 2 minutes left before we conclude. I wonder if you have any final remarks on the subregion.
I think that this is a situation where companies are needing to hit the reset button entirely on their go-to-market strategy, not just in this subregion, but regionally and globally. I've shared a lot of relatively harrowing figures today, but there are lots of opportunities for growth. There's lots of opportunities to resegment your customers, understand who are the more resilient customer segments, the more resilient markets, sub-markets, I should say, more resilient industries, and target those industries and segments accordingly. And this could be a great time for your company and your local team to try to gain some of this market share, while your competitors may not be doing the same strategy. In other words, I invite you to think of this more as an opportunity of how I can expand my growth mandate in these countries, and not so much a recipe for bad news. That being said, obviously, with regards to these 3 countries, they're extremely volatile. Make sure that you have your financial and operating hedges in place now for at least the next 3 to 6 months. In the case for Chile, you might want them on the board for the next 1.5 to 2 years. Just to make sure that you cover your downside, especially amid currency volatility and economic volatility in these countries. But overall, like I said, I encourage you to stay optimistic and look for the opportunities in this otherwise relatively complicated operating environment.
Perfect. I think that's the perfect ending on this session. Thank you one more time for your time and insights, Alex. Really fantastic to speak with you. As a reminder to everyone still on the line, if there are any questions that we didn't answer, we will be following up with the responses via email with your relationship manager within the next 24 hours. Thank you, everyone, for your time and for joining us. Have a great day, and we look forward to speaking with you again soon. Please stay well and stay safe.
Bye, everyone. Thank you.